Welcome to TMS Insights. It's a new financial year. We love a new beginning, Ben, and it's a time to assess what's been going on and give you a little bit of an idea of what's coming up. Ben, what's really been interesting talking in the last little while is this uber macro environment, talking US presidential elections. We had an election in the UK overnight as well. A week ago, we had that presidential debate, which was somewhat of a farce. And it's got a lot of people talking about what it could mean for, obviously, the political outcomes, but the economic outcomes as well. Let's talk about what Donald Trump means potentially and what the US could look like as we go through the back end of the year into that election.
Yeah. So, look, it's going to be very hard to know, I think. I mean, Trump was good for the share market in his first presidency, and he would often use the Dow Jones as a scorecard of how he was performing as president. And I suspect if he does win, you're going to see the market rip higher potentially on the back of that. But there will also be challenges because Trump has spoken about getting rid of Jerome Powell, who he sees as an enemy, and potentially trying to rid the Federal Reserve of some of its independence. He's spoken about putting a 60% tariff on imported products from China and a 10% tariff on other imported products, which could potentially create inflation. And then potentially you might have a less independent Federal Reserve trying to deal with that. But I think it's just a good reminder, Jez, and we'll always end up saying this, is politics it can matter for a little bit of time, but it won't in the scheme of time.
That's a really important thing because there's so much spoken about and people catch up and they love talking about this because it does matter. But it doesn't matter to the economic outcomes very much.
No.
And we've seen that you don't have to be uncertain about what things might look like. That man's already been president of the United States. We don't have to spend too much time worrying about portfolios, investments, particularly outcomes that won't really be determined by the more important things. And so we want clients to be focused on the things that do matter rather than be distracted by the things that don't matter. And this is one of those things that won't really matter enormously.
No.
It can around the edges, but not...
There could be a few days of reaction and that would broadly probably be it.
And what does matter though, and we say this regularly, so at risk of repetition, earnings and interest rates. And we talk a lot about those things because they're the things that really matter. Now, on those things, because that's what will help everybody get better outcomes, after a year where markets did have good returns, in the face of interest rate moves and concerns about other things, including geopolitical. But let's talk about interest rates briefly, and we're going to get onto earnings and talk about stocks and things. So interest rates locally, the picture looks different to globally.
We're an outlier.
We're an outlier. We never went as hard with the RBA thinking they'd done enough and now concerned they haven't. Recent reads on CPI, etc., have been uncomfortable. So there is a prospect here we could have a rate rise.
Yep.
Equally, we've had people like the European Central Bank and the Bank of Canada cutting rates.
Bank of England.
And the US is not far behind.
So Jerome Powell gave a keynote speech earlier this week and surprised everyone by saying that they had seen the disinflationary process kick back in. And it's now widely slated that September will see the start of the rate cutting cycle in America. So we could disconnect somewhat, it feels like. And
briefly, perhaps. It might be only a brief intervention the other way here to get to where we need to.
And I think the thing I would also say on rates in Australia is if we do see another rate hike, it's probably 2 at most and probably more likely 1. And that doesn't have a big impact on net present values of businesses and those sort of things. It could create a bit more pain for the consumer, and there might be some businesses that have an earnings impact from that. But I don't think from a valuation perspective it's too big a deal, particularly if America keeps driving higher. It's going to pull us along to some respect.
And it's the irony, it was this week's retail sales data, which had been soft for 4 months in a row, that picked up
Yeah.
and will cause perhaps the last part of that to make sure that if there is a change, it will go up. Let's get on to earnings, because it isn't a busy time, June and July, where we hear a lot of earnings, but we are now beginning to focus on the August reporting season. And let's talk about what's been going on with some results. So just backtracking, we've been through a very good earnings season through the last couple of years. The pace now, can it be kept up, is the challenge. And that's what we will be focusing on very heavily.
Yeah. Australian businesses have had to deal with a lot since the pandemic, it feels like, and the biggest issue has been around margins. So it's, we've all seen that the cost of doing business in this country has risen, and it's the businesses that have been able to pass on those cost pressures to their customers have been rewarded by the market, and those that have struggled to do that have been hit by the market. And I think, like, we're in the so-called confession session at the moment, which has been quiet, I would say. It's definitely been the retailers that have been coming out. We've seen from AP Eagers and a number of others that they're calling out a softening in the state of the consumer. But the market, to me, feels like it's, despite this maybe higher for longer interest rate environment we're in, it's trying to find businesses that can grow despite what rates could stay up for. So, we are seeing in, like, the healthcare space, tech stocks, and in that growth space generally, there's been some underlying strength. The banks have been very good. In fact, the banks had an incredible financial year last financial. It surprised everyone, I would say.
Without the earnings growth, but their margins have increased, and that's not passing on to depositors what they're actually able to get from when they actually do lend out. So that's been good. And I suppose that's the example really for us to say, on the back of earnings, they don't look like they're going to be a concern. We may not see as much earnings growth in this August season, but it looks solid. So, and the part then that we want to talk about, I suppose, is that the number of high quality issues on the market are keenly sought after. I mean, if the ones that particularly special stocks are getting a lot of loving, aren't they?
Yeah. So
we are seeing that. And this plays into a theory and a theme of how much in the public market space is disappearing. And we know in 2023, the number of listings on ASX shrunk. Over a longer period, we're seeing the same thing in the US. And it's actually really the story here, Ben, is the rise of private markets. And before we get into that, let's look at one that's jumped that curve from being a private, smaller business to an IPO, because it listed just before the end of financial year. Guzman and Gomez, GYG, was a stellar debut. Tell us a bit about that.
Well, the largest shareholder there's a mob called TDM, and they pulled every lever very smartly to get a big pop out of the share price on day one. There was apparently like 92% scale backs on allocations in this IPO, and it's very tightly held. I think for me, what it said was, it was a reminder how long it's been since we've actually had a reasonable size float to actually have a look at. It's been years. And at the same time, every 6 months we are losing businesses. We've lost Boral, CSR, Adelaide Bryant,
3 in the building materials
in the last
June.
3 months. In the last month, and they're big businesses. So this is a global trend. Stock markets globally have been shrinking for over a decade now. More businesses are choosing to stay private because they look at the volatility, the compliance costs, the time that is involved in listing on the market, and they also look at, there's so much capital available to grow in a private sense that more businesses are making the decision not to list. And, that's certainly got us, over the last 6 months, we've been doing quite a lot of work looking at avenues that we can invest in to get access to these private businesses. And, it's probably going to be something we'll be talking about more in the next 12 months, because I think you're crazy to ignore this thematic, even though we have a public, it's always been what we've done. You can't ignore what's happening.
No, it's what we love. It's what we do. Direct investing and ASX and listed markets globally have been our vehicle for doing that. But to the exact point, when there's other opportunities, potentially a lot better opportunities and deeper pools, we have to be bringing that to our clients. And as Ben mentioned, we've done a lot of work over the course of 2024 so far, and we'll be talking to you about some of these offerings. So do get in touch with us about that, and we'll be talking with you about it. From a forward-looking point, though, Ben, beyond just talking about things like the private equity space, and it's interesting, time of year, July is a little bit quiet, isn't it? It's the calm before the storm of a very busy August. What should people be looking at now?
July, we've got school holidays. I think, all the fund managers close up shop for a few weeks, and August, everyone sort of battens down. Most companies are now in blackout periods, so they don't actually talk to the market because they're aware of information the market's not. So there's a self-imposed silence that is put on most companies, and then we push into August. So, I feel like we're pretty well positioned at the moment. We've had a really good financial year that's passed, great numbers, and feels like there's always a time when August is a period to reassess what you own and also to look at some things that you don't and think, should we be owning them? That's probably the main thing we want to be doing.
Yeah, that's good. Well, we will leave it there. We'll be back in August. We'll do 2 TMS Insights as reporting season gives us that wealth of information from the companies, and we look forward to bringing you all of that then.